Deep behind enemy lines, a collapse is brewing. We've been waiting for this moment to happen ever since the financial system was propped up back in 2009. And right now we have a financial crisis part 2 that has begun. And this is all centered around the debt that has been accumulated over these past few years. You came here for the truth, so let me unveil that for you. Let's take a look at just the past 27 days, a hot streak that has not occurred since 1928. Now, isn't that wonderful? Because in 1929, everything was fine. Nothing happened after that. Let's just skip ahead another century, and here we are. So what they would like to show you is that everything is just fine. Let's not compare that to the past. In fact, in that time, it actually dropped dramatically after that 27-day run. I'm not saying that's necessarily going to happen, but what I'm trying to suggest is that the mainstream media continuously puts their focus on only the positive notions, and we need to look at the negative too. It is very important. Perhaps everything is fixed in the economy and we can all go home and live happily ever after, but that really isn't the case. So let's get more into this here. We're looking at this comparing the Euro area right now to Japan back in the 90s. And you'll see here that they are running into the exact same issues. And we all know what Japan is like today. We are really seeing them at a level they cannot ever get out of. They're going to have to get into the quadrillions of yen being printed in order to get their economy, not the real economy of course, but their stock market and other things to go again. But look at the Eurozone, many ways matching up. Here are 9 different ways. I'll just quickly review the real GDP, core inflation, unemployment rate, monetary policy, government spending, nominal wage, consumer credit, real effective exchange rate, and working age population. So these right here show you 9 different reasons why they're heading in the exact same direction, and that should be worrisome for those in Europe, but also for the rest of the world, because of course with globalization, this is a concern of mine. Let's get on with it. Right here, out of market economics, global business confidence slumps to a 5-year survey low. And that's where we are at right now. That's global business. And we're worried about that because, of course, there are many things needed right now to pump up the economy. We can't afford this right now. It simply is too weak, too fragile. The risks are very clear. And right now, we're headed into a time where there really isn't many avenues to look down for any sort of positivity. And this is what it all comes down to. Exclusive China ready to cut rates again on fears of deflation. This is out of Reuters, and they're ready to cut rates because they're saying that they do not want a slump in their economy. They're going to bring down the interest rates. They're going to relax the rules, and this just allows the bubble to continue. Just blow up that bubble continuously, get it going. And of course, this will do nothing but make things worse down the road. They kick the can down the road. And all other countries around the world have done this. China has to watch out for their inflation. So they had the interest rates higher than the 0 level, definitely. But other places around the world are at about 0. So when you have this, it causes a really big problem for the real economy because people can't save. They know that putting their money in the bank or under their mattress is going to lose money every single year. We see that with the food prices, electricity prices, and so on. The dollars are devaluing. So this right here is a sign to me that the economy is getting worse. But of course, if you mention that China is not doing so well at the moment, you become crucified. Okay, so let's get on right here. Looking at falling prices, this is from my book, and what I was talking about was the housing market. And it said this boom was fueled by the continuously low interest rates and government policies that allowed virtually everyone to own a home, even when they couldn't actually afford the mortgages. If the interest rates rise beyond their historic lows where they are at now, even more people will be forced to become renters. And what exactly has happened? And the interest rates have barely moved. Many more people have turned over to renting. The home ownership rates have declined. These are things that I talked about in my book, and they're already happening right now. And it didn't even take an interest rate rise, much of an interest rate rise at all. We're virtually at historic lows still right now at this point. And of course, if they're able to rise even a little bit just to calm down the inflation or for whatever reason, this is going to destroy these people. Let's move on. This is some startling facts. You can read this for yourself, talking about the gas price, and you can see how the oil price is going down significantly, but it's not matching what's at the pump. And people are really upset about this. Take a look at it for yourself, read through these stats, but let's just look at this one here that I found most interesting. You have about $600 billion. And what is that? That's the total subsidies in 2010 dollars to fossil fuel companies from the U.S. government from 1950 to 2010. That is incredible. $600 billion in subsidies over to these companies, and yet they just charge us an arm and a leg. The prices are going up, or they're near all-time highs in many cases, and you look at it and it's the government funding. Where does the government get their money? From the taxpayer. That's us. So let's go on. TransUnion, auto loan delinquency rate and debt rise again. Does that surprise anybody here? No, of course not. They're not able to afford the big ticket items like houses and cars anymore. This is declining at a rapid rate. We're seeing this happen after the financial crisis. They had many things like cash for clunkers, trying to get the auto loan industry to give a boost. They boosted the companies themselves by handing them multi-billion-dollar bailouts so that they can build their factories in the third world to increase their profits, and they did so, and they're doing so right now, in fact. But again, even a car, which is not as much as a home, obviously, is really hurting people in their pocketbook. And we see that now statistically right here. You cannot argue this information. And I just wanted to throw this in at the end here. This is happening yet again. Police investigating the death of Mass Mutual executive. And, this person was stabbed, unfortunately. Quite sad. And you can see this happening where so many people in the finance industry or the insurance industry, somehow related to the finance or economics, they are finding themselves in a bad situation, whether it's suicide, whether it's murder, suspected suicides. We're not really sure what's going on here, but it seems to be that these numbers are really piling up right now, and I'm not sure exactly what's going on here, but it's definitely a pattern that has been forming. If you have found this informative, please give me a thumbs up. I'd really appreciate that a lot. And the comments and everything, I'm trying to get back to every single person. There's just so many. If you want to get a hold of me, the quickest way and the way that I will for sure respond, please email me on the Insiders. If you get on there, I definitely reply to everybody. That's my first priority. And speaking of the Insiders, don't forget to become one, and that is at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.